Gold's a juggernaut at the moment. It's difficult to see what's really going to cause much of a protracted sell-off. I mean, we can have a look at the risk reversal market and look at the skew of call to put volatility on 25 deltas and see that's trading well over 4 at the moment, and that's never been this high. So the market, in terms of where they're positioned in options, I think as a good leading indicator for spot, has never really been this bullish on where they see price going forward, and that's 1 month or 3 month or whatever time frame you're looking at. Certainly the options market is saying that we're happy to buy up call volatility at the moment. Positioning in gold has obviously become somewhat stretched. You've seen that in the commitment of traders report at the moment. But what's going to cause the reversal? We have to take a view on real yield, of course, and you've got 10-year real yields looking like they may turn negative at any stage. It's about 10 basis points. 5-year real yields are heading that way. We've got a situation where the ballooning pool of negative debt is well over $15 trillion at the moment, and gold's been working well as a hedge against that ballooning pool of negative yielding debt. The fact that gold has no yield is yield in itself in that sort of paradox situation. So gold is being used as a hedge against what's happening in that negative yield. But also, if you look across G10, find you've got an unwind of the carry, which is causing Swiss and yen upside. But at the moment, gold is working well. Over the last 5 days, gold's up over 2% against every G10 currency. So gold at the moment is your best currency in a bad neighbourhood situation. So what's going to cause the unwind? Well, you've got to take a look at the bond market. If we do see a sell-off in real and nominal bond yields, then gold's going to cause a bit of a pullback on the idea that there's probably a little bit too much love there in the short term. But that remains a buying opportunity because I think if yield curves are going anywhere longer term, I think they're going flatter. I think bond yields are going lower, and I think gold therefore has further upside. Well, we've been saying that the 2011 lows around 1522 would probably be a realistic target. We're not a million miles away from that time at the moment. I think longer term, if we were to get a sort of medium term protracted move higher from here, which continues to be our base case over a longer period, 1587 is probably the target we're looking for, going up to 1600, that 1587 representing the 61.8% retracement of the all-time high down to the 2016 low. But certainly in the short term, we're looking more likely where the support levels are. And we don't see too much of a move lower. There is a lot of love in gold at the moment, but I think we're looking at support levels at the moment more appropriately, where we'd be averaging into new long positions as opposed to upside, because I think there's so much love for gold. If we do see a sell-off in yield, then of course gold's going to go a little bit lower. So where is the support going to be kicking in? And that's where we're looking to buy. But longer term, we're still looking for 1522, potentially moving up to 1587 over a more protracted period.